Hey, all you traders out there, good morning and welcome to a new start of a new week. So, ladies and gentlemen, welcome to Monday. I'm Darius Anucauskas, I'm the global market analyst here at Markets.com. Look, we do have a relatively busy week this week, especially filled with interest rate bank decisions. We have the RBA, we have the RBNZ, and we have the People's Bank of China coming out. So, yes, keep your eyes on those. We should have quite an interesting week, in my opinion. Also, Canada's CPIs are coming out, and a bunch of other little pieces of information which I will cover in this webinar. So hey, stick around. Hopefully you will enjoy the session, and I'll see you in a bit. Alright, okay, hello and good morning everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So, look, just a quick little fix of the microphone. There we go. I hope you can hear me and see me well. So there we go, now it's working. Look, it's a new week, new start. So welcome everybody. Today's the 17th, if I'm not mistaken, of February. That is correct, so 2025. Look, we have a relatively busy week ahead of us. Just a second, my microphone keeps on falling off a little bit. Just let me just fix it properly. There we go. I think now it's better. Look. Like I said, we have a relatively busy week. We do have a few key important economic events coming out. So about all that and a little bit more in a bit. Before we go any further, as always, we need to have a quick read through of our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, we do have, like I said, a few central banks delivering this week. Also, by the way, before we jump any further, a quick mentioning of our Markets.com. Oh, the wrong screen. There we go. This is Markets.com website. Where's that screen? There we go. That's the screen. That's the one that I'm talking about here. Let me just adjust it. Something has skewed. When I came back after the weekend, it seems like my OBS is had a life of its own during the weekend. So yes, a few shifts here and there. Oh well, there we go. Probably now it should be all fine. So yeah, ladies and gentlemen, like I said, a quick mentioning of our Markets.com website, which you can always check out for more information about us. So, ladies and gentlemen, let's have a look what's happening here in terms of the market. The first one, as always, I want to pick up here is Nikkei225. Okay, look, again, I think I'm already talking about this for 3 or 4 weeks or something like that, where the index is just kind of still moving, or should I say oscillating around the EMAs here on my daily chart. And the thing is that I need to see this one getting out of this potential ascending triangle pattern, which, as you can see here, is formed by this little short-term upside line and this key resistance area around the 40,300. Now, we got some data this morning from Japan. Let me just jump into that economic calendar. I'll show you what I'm talking about. We got some preliminary GDP numbers from from Japan. So let me just entire world. There we go. Monday. There we go. So that's what I'm talking about. So it came out the preliminary GDP numbers. So the Q-on-Q preliminary one came out at plus 0.7 against the forecasted low number, but the previous number was at plus 0.4. So that's a good thing. There we go, growth, and then the annualized one is at 2.8. So very nice things here for Japan. Can this be sustained? Well, let's wait and see. Of course, like I said, this is the preliminary, so everybody's very happy about this. We're seeing some action here in the Japanese in the Japanese index, look, action is minimal, to be honest, because again, maybe the fact that it's preliminary, that's something that, you know, the market doesn't really, you know, okay, everybody's happy about this, but let's say it's not the final one, right? So, long story short, for now, what I can see here is, let me just fix my microphone here. It doesn't want to. I think it doesn't want to sit properly today. There we go. Maybe this one will be better. So yeah, like I said, for now, I would say it's a little bit of a problem. I would say, you know, we're still waiting for some sort of a catalyst that could take out Nikkei out of this little, I don't want to call it a range, I want to call it an ascending triangle pattern within that, but we're still within that pattern, so we need to get an exit before we can, you know, get excited about the next short-term directional move. Let's have a look what's happening with Australia. Now, Australia is waiting this week. We are waiting for, you know, for the RBA interest rate decision, which is coming out tomorrow. By the way, let me just show you what I'm talking about. So, interest rate decision right there. Now, what's interesting here is that we are expecting a cut, and we have not seen a cut since. And let me just have a look at this chart here. Yes, there we go. We have not since seen a move in the interest rate for about since November of 2023. So as you can see here, we were growing rapidly from 2022, where we were kind of at zero, a little bit above zero here, and 0.1, and then we grew from here all the way to 4.35 very rapidly. So now we're expecting a bit of a cut. In the number, going from 4.35 plus 4.35 to plus 4.1. So basically a 25 basis point cut. Now, what can I say here is that for now, I am, yes, of course, the market is, you know, expecting this. We might see, if we get that, and most likely we will get that, we could see Australian index popping further north. So if that's the case, then yes, of course, all-time highs, maybe those could be on the table. Looking at this number right now here, let me just show you what I'm talking about. So this little area, the high of Friday, near the 8,628. If we can get that nice clearance of that area, yes, I'm getting more comfortable with the upside. My problem with with these all-time highs is that, or especially with these areas near the all-time highs, is the fact that it's really, you know, it's very difficult to sometimes even aim for these, because if we clear the you know, current all-time high, then we're in uncharted territory. Then it becomes a little bit difficult to find a good target, unless we want to apply my beloved Fibonacci level, which is just a second here. There we go. So it depends again how you draw this one, because again these can be very subjective, not very objective, but subjective. So if we're drawing it from the lowest point of August of 2024 to the highest point of December 2024, then to the low of 20th of December, so basically the lowest point of that December 2024. If we draw it this way, then we can see that we have some room here still, maybe going towards that 78.6%. But for that, we need to clear the 61.8 again. So look, it's all getting a little bit messy. So that's why at this point, although I do love Fibonacci extensions, at this point, I would rather just stick to the current all-time high, wait for a clearance there, and then kind of do something about it. China 50. Now, China 50, we are getting the on Thursday, if I'm not mistaken, let me just double check. Yes, the long prime rate, the 1 year, and the 5-year one. There we go, stalled a little bit. So we're getting those rate decisions, and if at the moment the forecast for those to be the same as previous, well, it's fine. I mean, in general, I think that the rates here, let's have a look at the 1 year. Let's launch the chart here. And yes, leaving side, there we go. Let me just put this on the chart here. So the rate, as you can see yourselves, has dropped I wouldn't say quite significantly, but just has dropped recently. And I think that this is all to do with a slight slowdown in the Chinese economy, which we're seeing. And this is where probably, you know, that's why probably the Xi Jinping managed to, or held a conference, like a symposium with all the private business leaders of China, where, you know, some suggestions were delivered, and you know, how to go further, and what's the vision of China, and you know, how these companies should help out the Chinese government and everything. So the usual stuff, basically, you know. But the symposium was held. The big top company leaders were seen there, and yep. I mean, at the moment, I mean, what they're probably going to say, well, okay, then maybe we need some, you know, more cuts from China, from the PBoC. At the moment, like I said, it's sitting at plus 3.1. It's already relatively low. Maybe we could squeeze, you know, a little bit of a drop below the 3% level, like something like maybe 2.85 or maybe, you know, something like that rate. Like I said, maybe that could be the case, but we don't know yet. But at this point, we don't have an expectation for a cut or a hike or anything like that. Just we're basically, the expectation right now is to see the same rate coming out. Now, how this could play out? Well, look, I mean, if we don't see a hike, then I expect this index here to still remain on the slightly stronger side. But of course, there are surprises. Different things happen, and we might see, you know, some sort of let's say action if we do see like a little bit of a drop, you know, in the interest rate. Then that would be spectacular in my opinion. But for now, looking at this technical picture, looking at the China 50, I'm still remaining positive as long as we remain above. As long as we stay above all my EMAs here on the daily chart, and if we can stay above this 13,000 kind of 150 zone right there. Yes, I previously talked about this one being the upper side of this little range where we were stuck in. So if we continue to trade above that hurdle, I am leaning towards the upside. Let's jump into the US indices. Now, today, on Monday, we have China and Canada closed, if I'm not mistaken. Let me just double check very quickly on the calendar. I think so, yes. So yes, it's a quiet day. Do we have anything sitting here in the calendar just kind of stating that? I mean, we don't, but I think that yes, I mean, everybody knows that we're US and Canada are closed today due to the Washington's birthday, and then Canada is celebrating Family Day. Okay, so look, yeah, today is going to be a relatively quiet day in my opinion, apart from Europe. So Europe will be the one to watch. But hey, looking at this picture, I'm going to stick to the same thing here on the US index here, which is Dow. If we do clear the 45,075 territory, then this is where I'm going to get a little bit more excited with the upside. For the downside, in the near term, I need to see a drop somewhere below this 43,820 zone. If we can clear that one, great. I'll consider a move towards this upside line, taken from the low, the 27th of October of 2023. Again, at this point, I'm just observing the price action in terms of the economic calendar in the US this week. Let's have a look. What do we have? Washington's birthday. Yes, we have. I know that we have the FOMC meeting minutes on Wednesday. Yep, that's correct. Also, API crude oil stock exchange for those who are trading oil. Building permits are coming out on Wednesday as well. Nothing major there. Philly Fed, right? Okay, so initial and continuous jobless claims. That's one thing on Thursday, but the Philly Fed manufacturing index is coming out, so we are expected to see a very big drop in my opinion. Yeah, I mean, look, I mean, okay, previously we also expected kind of the forecast was at minus 5, but it came out at 44.3. So Now we're expecting a drop here. So just if we're following the same logic, it seems like, you know, we're expecting a lower number, it comes out higher. So now we're expecting now the expectation is for a higher lower number, if you understand what I mean. Then maybe this could come out on the higher side. Again, let's see. Or maybe on the contrary, maybe it will stabilize around, you know, the 25.5 mark, because maybe that's the, you know, normal logical level. Again, we'll keep an eye on that. We may see a bit of volatility during that number, or maybe after the release of that number. Friday, yes, existing home sales. Also, we have the flash, so the estimates, the preliminary numbers of the S&P Global Composite Manufacturing and Services PMI figure. So, okay, look, what can I say? For now, looking at this picture, Dow is stuck, so we need an exit, and I already told you about the levels. S&P 500. Okay. What I'm looking at here is basically the current all-time high. And let me just double check if, yeah, I mean, this is the cash index, and what we're seeing, so this is the high, which is around the 6,126. And did we clear that? Yes, we did clear that. We cleared it, and we created a new all-time high here on the cash index, on the S&P 500 cash. Okay, that's interesting. Can we get that push, and can we stay above this area? Well, if we can, then wonderful. More buyers here could join in. So if we can stay above this barrier, the 6,126, then great. I will go further north. For the downside, a drop below the 50-day EMA could be an initial good area, and if that gets cleared, certainly this upside line is something to watch, because again, it coincides with the 100-day EMA here, shown as the blue line, and basically then we are, you know, what we are looking at here is we're looking at the upside support line, we're looking at the 100-day EMA, and if that gets cleared, certainly that creates more, you know, negativity. But again, for now, we remove the negativity. We are, at the moment, we're hitting the all-time high, and can we go for a new one? Let's wait and see. Of course, like I said, today the market is closed, but tomorrow, maybe when the market, you know, hits back, opens up, and that's where we could see, you know, a further move north, and we could see that push to the upside. So a further push to the upside. NASDAQ. So this is what I was talking about previously, ladies and gentlemen, and basically I said to you that NASDAQ a while ago, like in January, I talked about this, and I said, look, we had an all-time high done on the Dow Jones Industrial Average. We had an all-time high done on the S&P 500. NASDAQ was the laggard. There we go. Boom. Now we hit the new all-time high here. So we have the S&P, we have the NASDAQ, which are hitting the all-time highs. And at the moment, I mean, Dow becomes the laggard. So can we see the Dow now hitting the all-time high, because those S&P and NASDAQ did already do the all-time highs? So can we see the further move north here on the Dow? Unfortunately, that's something for the market to decide. We can only react to it, and unfortunately, we don't have a crystal ball, so we'll have to just play the reactive, you know, game. At the moment, I would say it's quite interesting to see how this is going to go further. I mean, the NASDAQ is, like I said, is hitting the all-time high, and as long as we continue to trade above this previous all-time high, yes, I'm going to aim further north. Let's have a look at the dollar index, and the US dollar index here is at an interesting spot here as well. We are resting near the 100-day EMA, just slightly above it. And what can I say? For now, it's a good area of support, and it's a good target. I mean, I've reached my target. My next target right now is the 200-day EMA. But for that, we need to see a drop below that 100-day EMA, and then we'll go from there. So 105.5 zone here, this is what I'm going to be aiming for, but I prefer, like I said, just to see a test of that 200-day EMA wherever it's going to be. But for that, again, we need to see a clearance of that 100-day EMA. In order to consider a move higher, at least in the near term, I would like to see a push above the 50-day EMA in order then I will get a little bit more comfortable with the upside. Let's jump into the German index DAX, and looking good here. So it seems like we want to go for another all-time high. Well, ladies and gentlemen, let's see what's going to happen here. 22,629. Let's round it up here a little bit. That's something that I'm watching, and if we can, yes, get that clearance, I cannot say anything. I mean, initially I was targeting that 22,000 zone tick. Now it seems like we want to go for that 23,000 zone. Well, but again, if we're going there, then I would say we need a clearance of this barrier, this 22,629 zone. If we can get that move, then of course, yeah, like I said, I'll slowly aim, because we're going to be in uncharted territory. I'm going to slowly aim for that 22,700, 800, 900, and then maybe the 23,000 zone. So these are going to be my steps going further. Let's have a look. Let's have a look at what's happening in Europe in general. In Europe, and actually, I want to also look at UK, European Union, Germany, and United Kingdom this week. So. Okay, trade balance coming up soon from the Eurozone. Tuesday, what we're getting here on Tuesday, we're getting the unemployment numbers from UK, right? Okay, let's have a look at what's happening with the FTSE 100 so far, what has been happening with the FTSE 100 so far. So after we've created a new all-time high, near the 8,837, we started drifting back down. So in general, as much as I would like to draw here an upside line, I think that is going to be a little bit on the tentative side, and yeah, it's not the clearest, I would say, but okay. It's the short-term tentative upside support line. We only have 2 touches here, so there could still be a rebound at some point. But look, either way, I mean, if you're looking for some higher levels on the FTSE, then wait for a clearance of this this current all-time high, and then kind of we can do something about it and go lower. Ladies and gentlemen, let's jump into the Forex world very quickly. AUDUSD. So of course we are watching this, and look, what I did here last week, what I've shown you, I've threw out this little idea here on the AUD and NZD scenarios, basically because at the moment we're seeing some upwards action in AUD, USD, and NZD USD. So yes, the US dollar has been on the weaker side lately. However, it stabilized a little bit, but this one still, these two pairs still seems to be pushing higher. In my opinion, this could be something to do with the fact that we are expecting cuts. So on, let me just jump into. Australia, New Zealand, there we go. So I just wanted to find those basically. Let me just jump into those. Look, on Tuesday, interest rate decision from Australia, and that one, look, I mean, that one is expected to cut by 25 basis points, which is fine. It's okay. I mean, Australia has not been there for quite a while. I mean, as I already showed you the chart, it has not cut its rate since the end of, it didn't do anything. I mean, they hiked at the end of 2023, and now it's time to see a cut. It seems like that. Well, will that be the case? Let's wait and see, because at the moment, yes, we're seeing some action here to the upside. It seems like the market is kind of excluding the fact that we're going to see a cut, which could be a bearish thing for the Australian dollar, and maybe that's why they're trying to have this moment for now for themselves, or should I say the bulls are trying to have this moment where they know that there's going to be a cut which could weaken the currency. So let's lift it a little bit higher before, let's say, the interest rate decision, which is coming out tomorrow morning, and then we could see a reversal back down. So basically what I'm expecting here, I'm expecting to see a further move north. Maybe I could see and at least for today, maybe we could see a test of this 100-day EMA, and if it holds, if it provides good resistance, then we could see a reversal back down. Now, what's interesting here is could be that if we don't see that cut, and if the bank says, you know what, no, it's too early still, we don't want to go for that cut, and unfortunately, we might see inflation picking up again. So that's where, you know, we could see this pair pushing further north, further to the upside here towards that 200-day EMA, and then we'll go from there. So long story short, again, this is, like I said, this is quite interesting here. This activity here is very interesting. Very, like I said, everybody's thinking that, okay, you know, we're expecting the rate cut, so why the hell it's, you know, it's pushing higher? Well, it's because, like I said, it's just at this point, because the pair has already been battered and it was on the weaker side. That's where maybe it's, you know, it's coming from. Maybe it's because, like I said, it's we're expecting that cut, and then we will go lower after the decision, after the rate announcement. Because maybe there is some, like, a little bit of hope that RBA might not go for that cut. We'll see. Again, let's not over speculate here, but hey, it will be interesting to I'll pick up on this one. I'll pick up on this one later on, and then we'll see. NZD USD, ladies and gentlemen, looking good here as well, pushing higher, and look, the similar story. Basically, I don't have much to say, or actually, I don't have much to say. What's something different than what I said about the AUDUSD, and RBA, because the RBNZ is expected also to cut, but those guys are expected to cut a little bit more drastically with a 50 basis point cut. Okay, look. That's absolutely fine. You can do whatever you know. What the central bank can do whatever it wants to do. However, what can I say? Like, at the moment, we might see some action here to, let's say, today on NZD USD, but then it could reverse back down very quickly if we, like I said, if we see that cut. And if the market participants say, you know what, the dollar has somehow stabilized a little bit, let's maybe, you know, see if this pair can go down. And well, this is something that, like I said, could happen. So yeah, look, long story short, for now I'm leaning towards the upside as long as we stay above the 50-day EMA, shown here as the green line, and my next target is the 100-day EMA. If we do clear the 100-day EMA, great, I'll go for the 200, but I'm being very careful in these upcoming days because, again, we are expecting those rate cuts from the central banks. So let's jump into USDJPY very quickly. So look at this, looking good. From the short-term perspective here, very short-term perspective, we're trading below this this downside line taken from the high of the 10th of January. We're now also falling below all my EMAs on the daily chart. So this is kind of indicating a little bit of a bearish signal and a bearish moment. But I need to see a clearance of this 150.92 zone in order to go lower. Then, yes, of course, I'll start considering some of these levels, but again, my preference here is to wait for a drop below this 150.92 zone, and then, yeah, we'll go from there. For the upside, very straightforward, push above this downside line, and this downside line and all the EMAs here, then yes, that could create some positivity, and we could see some moves, nice moves here, potential nice moves to the upside here towards the highest point, the current highest point of this year, near the 158.87 zone. USDCAD and resting, it's basically doing the same thing as the DXY is doing. Look at this, I mean, like, it's just, where's that DXY? Also resting on the 100-day EMA after getting a nice little breakout. So, yep, USDCAD here. If we're looking for some lower levels, well, clearly we need to see a drop below the 100-day EMA right there. And then we could target this 200-day EMA together with the 1.3946, or in general, the psychological, like 1.3950 zone here, I would say. It's never the exact level, it's more of the area near that level. So for now, like I said, that's my game plan. But again, for the downside, a drop below that 100-day EMA is required. USDCHF very quickly. So yes, beautiful breakout here happened last week. We fell below this upside line and the 50-day EMA. We're currently seeing a little bit of a retracement. As long as this 50-day EMA continues to provide resistance, then yes, my next target is the 100-day EMA and the 200-day EMA right there. Let's have a look at the other pairs, EURUSD, ladies and gentlemen. So unlike AUDUSD and NZDUSD, which are kind of picking up interest because of risk on environment right now in the market, Euro is a little bit on the shaky grounds. Yes, the US dollar has declined a little bit, but like I said, Euro is on shaky grounds because Euro is in this unstable moment because of the U.S. officials kind of harsh words and stuff like that towards the European Union. That's where, like I said, that's where the interesting bit comes in. So although we're seeing EURUSD pushing higher, can this actually go back up? Well, that's a big question because we do have still a lot of obstacles. Not only the fundamental obstacles, but also, also technical obstacles as well. So looking at this picture, this 1.0533 territory and together with the 100-day EMA here shown as the blue line are the ones that I'm watching. If we do get that clearance, great, I'll go higher. But if we don't, if we struggle, I'm considering a bit of a move back down. EUROJPY very quickly. This looks to me, from the very, very short-term perspective, this looks to me quite bullish. We have ourselves a pole, we have ourselves a possible bullish flag, so let's see if this is going to end up being one. And we will see, let's say, a nice push back up here. So again, for now, I am, like I said, I'm sticking to slightly higher levels here, again, in the near term, but a clearance of this area somewhere is needed. Yes, probably this 160.30 could be good, but then I have a problem with the EMAs here as well. Right, okay, look, let's keep it short and simple. In that case, if we do clear this 160.30 zone, I'm leaning a little bit more towards the upside. Again, another thing to consider here is we're seeing a drift lower. We might see a little bit of a drift lower, maybe, but if this is going to start forming something of an inverted head and shoulders pattern, with the left shoulder being here, the head, and maybe we're now forming the right shoulder, maybe again this could be seen as a neckline for this little formation. For me to abandon this idea totally, I think what I would prefer to see here is a drop below. Actually, let me just drop below this whole area right there, this key area of support, which is around 155.45, 38 zones here, and then we'll go from there. Long story short, for now, it still is somewhat positive, but some confirmation is required. Very quickly on GBPUSD. So yes, this one, after breaking out nicely last week, we remained above this 50-day EMA. Now we're flirting with that 100-day EMA. We already tested it, but we're still flirting with it. And my next target is the 200-day EMA. If we do pop above the 100-day EMA shown here as the blue line. Right, ladies and gentlemen, by the way, whoever's watching this right now, let me know if you have any questions about maybe any other Forex pair which is of your interest, and I can pick up on that. Let's have a look at the commodity world. Gold looking interesting. Look at this roller coaster ride. Late Friday we came in, almost went for a new all-time high, found resistance near the current all-time high, and then reversed sharply to the downside. We fell below my little hurdle here, below this 2,907 zone. We fell below that, and basically what's happening here is the fact that we are now struggling to get back above that 2,907 zone. If we can climb back above it, great. maybe I'll consider a move higher, but still for me to consider a move higher, I need to see a push above the current all-time high, because this, look, we're still targeting that psychological 3000 zone. So what can I say? At the moment it is a little bit of an interesting situation here, and if we can get that nice clearance of that 2,942, then great. I will consider a move higher. For the downside, a drop below that, like I said, because we already had a drop below that 2,907 zone. If we continue to trade below it, there is a chance for a drift towards this upside support line taken from the low of the 6th of January. So yes, that's my game plan here, and then we will go from there. Looking at silver, let's have a look at what's happening with silver. Oh my God, look at this fantastic activity. We have pushed above that 32.30 zone, and then we stayed initially, but then at the end of the session we dropped back below it. We fell back below this key area of resistance. Now we're currently flirting with it, and my question right now is, are we gonna be able to stay above this hurdle? If we can, then yes, great. More, more buyers here could join in. But if we are struggling, but look, I mean, maybe this will go a little bit for a bit of a retracement back to the downside. Let's have a look at other commodities, and WTI oil, one of my favorite ones. Look at this. I mean, this is just getting very, very interesting. I talked about the psychological $70 mark. We're flirting with that one right now. So last week I said to you, keep your eyes on this. Yes, we fell back below the opening price of this year and last year. So now we're, like I said, we're resting on that psychological $70 mark. If we can drop and stay below it, I'm leaning towards that 67 zone, 66 area, yes, and then we'll go from there. Coffee, very quickly, just a quick update. A bit of a roller coaster ride, but yep, that's absolutely fine. We're stuck here in this little range. Yeah, I mean, what can I say? I mean, at the moment, I need to see a clearance of one of the sides of this range in order to consider the next short-term directional move. Sugar, one of my favorite ones, we're approaching this key area of resistance. I talked about it, and I threw out this idea on sugar. Where's that idea on sugar? Ah, there we go, the last one, yes. So I threw out this idea, ladies and gentlemen, you can check it out. Hey, everything so far is working out nicely. Let's see if we can get that clearance of this downside line. And finally, let's have a look at what's happening in the crypto world. So Bitcoin is stuck still. It's oscillating around the 50-day EMA here, shown as the green line. And the question is, can we go lower? Well, initially, I mean, everything's kind of pointing towards going lower, to be honest. But if this, by any chance, starts pushing higher and clears the 100,000 mark, well, look at this. I mean, this could open the door towards the upper side of this little box where the crypto is currently sitting in. For the downside, a drop below the psychological 90 area is required in order to go lower. Ethereum is looking interesting here as well. Look, we had some news from Vitaly Buterin, and basically that, you know, he's planning to do some modifications, some improvements to the whole chain, not the whole chain. What am I talking about? Honestly, like this. What was the thing called? Right, I can't remember. Some improvements to Ethereum platform, to whole Ethereum network. Honestly, like, I mean, this totally slipped out of my mind. But look, have a read through it. Like, honestly, the news is out there, and this, of course, is kind of pointing towards the idea of maybe, you know, strengthening Ethereum and everything. And however, look, what can I say? For me, I'm looking at this one from the technical perspective, because if cryptos do want to be more like currencies, but somehow something already kind of tells me they're not going to be more like currencies. They're more going to be like, you know, stocks or something like that, like assets. If they're going to be something like that more, then okay, we're looking at them. We need, you know, positive news from companies behind them. But if there are, you know, if we're talking about like as dealing with it as a currency, I don't know. I mean, maybe some cryptos will fall into that category, and some cryptos will fall into another. In my opinion, this is the future of it, because again, if previously they were like maybe seen as means of exchange, you know, means of payment, some will, like I said, some will become probably more like a stock. Like Ethereum, to be honest, I see it more of as a stock, and you know, and it's more like an asset where, you know, where you trade, like when the company releases good news or something like that, then, you know, it's the same story. So we'll see, of course, time will tell. But at this point, we're still, despite the good news that came out, still we're seeing some, you know, mixed feelings here. So because again, all these cryptos are tied to each other in a way, and you know, we need some good headlines, some good crypto headlines, which could help boost the morale here and boost the bulls. Ripple, let's jump into that one. We had a good move to the upside, but look at this. My 2.78 zone played out very nicely, so I'm going to stick to it. In order to go higher, I need a break of it. If we can get that move, amazing. For the downside, a drop below the 2.31 zone here is required. If we can get that move, I'm going to be very happy, and I'm going to go towards my 100-day EMA. Very quick on Litecoin, very quickly here. Look, I talked about this one as well, and I like this one to the upside, but I need a clearance. So until we get that clearance, I cannot really get very comfortable with the upside, because again, technically speaking, from the technical perspective, we are still somewhat bearish because we're on a downtrend from this from the beginning of December. However, like the fact that we're flirting, the fact that we're trying to create these higher lows, and we're flirting with this downside line, that's kind of giving an indication that there is potential for this one to make a move to the upside. However, the midpoint of this this falling channel, which coincidentally coincided with the 100-day EMA, perfect, wonderful. And there we go. We're seeing, like I said, we're seeing a drift back down. So what I said to you before, that as long as we stay below the midpoint of this falling channel, then there is a very good chance of this one drifting further south. However, a clearance of this 100-day EMA, I think, could open the door towards the upper side of the falling channel. Polkadot, very quickly on Polkadot. Let me just load up. There we go. We saw a little bit of a drop here, but again, we're near this downside line. So not that like we're falling very heavily here, no, but the fact that we're still holding near this downside line, this kind of creates somewhat of a positive atmosphere. So let's see if we can clear that. If we don't, now what I'm looking at here for the downside, I need to see a drop somewhere maybe below this 4.43 territory in order to consider a move lower. This is not a horizontal line. This is more of a line with an incline, so basically a trend line. And as you can see, this one here, drawn from the lowest point of August of 2024, is a good one to watch. But again, as I said, a move towards this area would be great if we see a drop below this 4.43 territory, somewhere around here. So, ladies and gentlemen, that is it. That is a wrap for this one. Let me know in the comments, let me know in general, what do you think, if you want me to cover a particular instrument next time. So feel free, honestly, just drop it in the comment box and we'll go from there. So, ladies and gentlemen, thank you very much. Thank you very much, and I hope you'll have a wonderful trading session. Well, maybe not today. Today is a little bit on the calm side because of the US and Canadian markets closed. but maybe tomorrow. And most importantly, tomorrow, if you are trading, you know, something Australian dollar related, be very careful. So yes, tomorrow we're getting the RBNZ interest rate. RBNZ interest rate decision that's happening on Wednesday. That's for New Zealand. RBA interest rate decision is on tomorrow. So, ladies and gentlemen, thank you very much, and I'll see you tomorrow. Or no, actually, see you on Wednesday. Wednesday, tune in. Tomorrow, by the way, tomorrow you will have some sort of like a little separate video analysis on YouTube. You can check those out. Yeah, and then we can go from there. So, ladies and gentlemen, thank you very much, and I'll see you later. Bye-bye.